The story of the past week has been the fall and fall of the dollar. From the index, that is, from 104 in early June to 103 in early July to 102 by July 10 and to a low of 99.57 on Friday. It's recovered just a wee bit. The triggers were the lower than expected US CPI and PPI inflation numbers, and this has in turn led markets to reduce bets on a second hike from the Fed ends this fall in the dollar and in US bond yields. Separately, China's growth story is repeatedly disappointing, leading to a steady fall in the yuan in a similar fashion as the dollar. So where are the dollar and yuan headed from here, and what's the impact on rupee and risk assets, especially equities in India? I have with me Sameer Goel, Global Head of Emerging Markets and APAC Research at Deutsche Bank, and B. Prasanna, Head Global Markets Group at ICICI Bank. Gentlemen, thank you very much for your time. Sameer, first to you. What's the situation with the dollar index? Where is it headed, you think?
Hi, morning, Lata. So like you said, I think the key bit to what has triggered this much sharper drop in the dollar index in the last few days, of course, has been the inflation print out in the US. I think if nothing else, it sort of confirms or gives more confidence in the fact that the disinflation process is well underway in the US, and maybe more importantly, that this disinflation process is happening in a relatively benign manner, as in it's still happening against the backdrop of a resilient US economy, and that this disinflation process is happening, it seems, more with a correction in the supply function than necessarily a downward correction in the demand function. Now, that's the right way for the disinflation to take place, and which has actually meant that the market's got a lot more confidence. Like you said, it's repriced its expectations around the Fed, which is now believed to be only hiking one more time this month, and probably that being the peak of the cycle. That certainly is what our view is gives us more confidence. But it's also equally true that a lot of the Fed speak we have heard since the inflation number also gives sort of rise to whether the central bank is necessarily as yet confident that this kind of move can sustain itself, and whether they would at the moment like to keep their options open about whether there is another hike still to come beyond this month later on this year. Like I said, our view is that this hike in July will be at the peak, but that's certainly as to how long the Fed kind of keeps that optionality open will probably determine whether we can move beyond this break of 100 into a bigger move lower in the DXY, potentially down to 95 levels. I think that will still remain pending a clearer sort of a signal from the Fed.
Got that. So, I mean, 99 or maybe 98 at best, but towards 95, we will require the Fed to say in the next meeting that it is not one and done, and that things are still open. Got that. Prasanna, what about your view on the dollar index? You agree that unless the Fed says it is one and done, the dollar is here, 99 and no more?
Yeah, Lata, I think I tend to agree with what Sameer had to say. And I do feel that the immediate move in the dollar index might have been a little bit overdone in the very, very short term. So there has to be a kind of a rebound before it again settles down at close to 100 levels. But having said that, in addition to what Sameer was making, the point that he was making about the rate rise on the Fed, I think over and above that, I think the reduced risk of hard landing and the fact that soft landing as a narrative has really picked up pace. The need of over tightening not really coming through. All of those have also, kind of led to improved confidence in the Fed to manage inflation. And typically, dollar tends to do well in two extremes. You either they do well when there is a crash in the economy due to some kind of a crisis, or US is doing really, really well. I think we've not had either of these situations, and we kind of have a very nice kind of slowdown in growth rather than a crash landing. And the fact that inflation is also being controlled kind of leads to the risk sentiment indicators improving, and that's the reason why we find dollar kind of depreciating against all other currencies.
And you also think that, okay, 99 you think is overdone, and immediately you can perhaps
I do think in the short term it is overdone, but I would tend to agree on a medium term. If Fed were to indicate that there is a peak which is in sight very much, whether it's even now we are still contemplating 1 or 2. But if it were to come to a conclusion that there's just one more hike, then I'm sure, there might be some more impetus to the dollar move lower. But at the same time, I don't think it going all the way to 95, maybe around 98 to 99 is the way I would think.
Okay. No, time permitting, I want to ask both of you about this resilience of the US economy and what it means to risk assets. But first, let's get Yuan out of the way. The GDP numbers were, again, subpar, unemployment figures high. Samir, the yuan depreciation is a new story. We were not prepared for this level of depreciation. Where is that one headed?
So I think there are two elements to the renminbi story, if you ask me. One is, of course, about the underlying weakness in the data, which has been coming through over the last few months, and which has kind of suggested that after that immediate reopening kind of boost one got from normalization of mobility and travel activities and so forth, it hasn't really been able to keep up that momentum. I think that's a question which then relates and directly into what is the pain threshold for the authorities, and at what point they show conviction that they need to come in to arrest the downside in the economy. Paradoxically, sometimes bad news is good news, in the sense that today's numbers will probably only further the expectation that there is a big package which is sort of imminent. Now, what is the shape and nature and size of that package still remains to be seen. But I think that's where we are heading on, how much fundamentally weaker the economy can get. The second bit is, of course, about the fact that the pace of the currency move always matters, and to the extent that the currency becomes a safety valve for the weakness of the economy, the pace had clearly exceeded the kind of comfort levels for the authorities, and we have kind of seen them trying to manage that by widening the basis between the daily fix which they put and where the market has been. And I think that's worked to the extent of at least reducing that level of the pace of the move and the level of speculation in the currency. The dollar move lower, of course, has also helped give somewhat of breathing space. Don't think this is necessarily the end of that story, but we almost definitely need now to see a package which can act as a circuit breaker on sentiment, which has definitely become a lot poorer over the last few months.
But very quickly, does yuan move to 7.5 is what I'm asking?
So I think, like I said, I think it will have to be a combination of both things. One, it will need to see a significant amount of disappointment with any package which comes. So either the package doesn't come or it's very disappointing in its size and shape. And second, we will need to see the authorities showing comfort with allowing that pace, allowing that move to take place for us to get to 7.5. But I think outside of those two, I don't think we will see the move necessarily stretch that far out.
Okay. But the fact remains that things have stretched a lot for an Indian currency dealer or a treasury manager. The dollar moving from 104 to 99 in 8-10 weeks, and likewise the yuan moving similarly from 6.8, 6.7 to 7.2 again in the same time, 10-12 weeks. Prasanna, what about the rupee then? Logically, rupee should have appreciated. It's really very rangy. So what's your estimate in terms of direction and range?
So I think, Lata, in this case, the entire action on the dollar weakness story has been taken up by all the other G3 and G7 currencies, and it's hardly, touched the rupee. And that's, I think, the point you're making, which is very right. And actually, it has clearly underperformed during dollar correction, and that continues. The primary reason is, of course, that RBI has been aggressively maintaining a range. You can call that range as 82 to 83 very broadly. And if you remember, our forex reserves at one point of time was as high as $650 billion. Then it fell down to 525. And then now we are close to 600. So I think RBI's objective has been to clearly recoup the lost reserves. And also, I think it is also a realization that in an economic cycle, when we are charting to some extent our own path in terms of interest rate level and interest rate hikes, and we are not blindly following the Fed, I think the realization has come also that the reserve route is the best way for us to, kind of prevent a run on the currency if we were not hiking as much as the Fed, because we are actually doing it for our own strengths and from our own internal policy perspective. And I think the accumulation of reserves is a part of that strategy, which is what the RBI has kind of, been following up with. So I think from that perspective, pretty much to answer your question as to where the rupee goes, I think left on its own, because of all the things that Samir and myself have spoken about, I would suspect that there should be an appreciation pressure if left on its own, and with the kind of FPI flows and the flows that emerging markets and India is getting, we should be appreciating. But I think RBI holds all the cards, and they have proved to the market that they can keep it constant. So it is pretty much a call on when do you think RBI lets it go. And to the point that since yuan is depreciating, all the more reason that RBI will be reluctant to let the rupee appreciate.
Absolutely. I think aside from all these reserves and all the nonsense they speak about, the real reason is ensuring imports don't come in and ensuring our exports do well. I think there is a macroeconomic reasoning. But Samir, very quickly, sorry I'm out of time, but risk assets have a good run in that case, isn't it?
Yeah, absolutely. I mean, Prasanna referred to to what we commonly kind of call the smile, right? I mean, I think if we are going to be in the middle of the smile with volatility down, like I said, disinflation in the world happening for the right reasons, that's great for risk assets and for emerging markets more generally. It's ultimately a carry vol game. We know the carry is already there. As long as volatility is lower, which has been the case for much of this year, carry assets have actually done relatively well. Like Prasanna said, INR hasn't appreciated not because it hasn't got the fundamentals behind it. I think it absolutely warrants for the currency to be stronger. It's more because the central bank has opted to keep it in a certain range, so it's not about the fundamentals necessarily about where the currency is really.
Absolutely. So actually, the point that our fixed income experts are making is that risk assets have a very good run. The US downturn, or rather inflation fall, is not because of demand, but because of supply getting better. And that means we are having all the elements of a soft landing. That's very good news even for the risk assets. It was a pleasure having both of you, and I'll take a rain check from both of you for a longer discussion a little later when we have time. Thank you very much, Samir and Prasanna. Rupee likely to be ranged. Wrap up on Bazaar. On that note, Chartbusters up next.